Morning, my friends, and welcome to the Breakfast Club. My name is Darren Hancock, and this is ThetaWaveTrader. Welcome this morning. Like I mentioned yesterday, I'm looking for today's candle to take out yesterday's high. So I'm still looking for more upside. And then tomorrow, catch a reversal off of that. So as the title of the show says, it's hunting that number one setup. So when you see lows have been swept, we look for the first little sibby here. And any trade back into that, you want to catch up for a long. That's a Model 1. Happens to overlap with the no-go zone over here. So I'm looking for this all the way down to that little imbalance. I'm going to load some more on there. Stop loss is right there. I don't want to see it come back through that. So I want to see it come right into this level here, give this a little tag, and then send it higher. And then we're going to look for a box-to-box run. And then we got to take profit Model 1, which is pull your fib tool from low to high and unload a portion at 50%, 62%, 70%. That'll be a box to box, or that'll be a Model 1. And if we get take profit Model 1 with a Model 1, and then see if we get a continuation here, or let's see if we get a reversal. Optimum trade entry reversal at 62 to 70%. If we continue to push it through, we'll drag our stop loss up behind it just to make sure that we catch that. The lion's share of the run inside this internal range of liquidity. And if this decides to make a new leg down, so you got to be prepared to say, what would be the worst case scenarios if this takes me out? Well, I'm not going to sacrifice a huge amount of money, but I'm looking for my setup. And my setup is, I want to see it tag that. And then run to the premium level. And then I want to see if that continues to push through for the equal highs we have up here in the hourly. Takes a run on those. And then yeah, okay, so there's our 4 on now. There's the retest there. If this goes in the opposite direction against me, then I'm going to use this no-go zone here as support. And we've been through it once, twice, but coming back to a level I want to see supported at. Now I want to see it really start to accelerate here. You really don't want to see it break back through here, because it'll be through once, through twice, and then it'll be 3 times if we get through here, which you clearly don't want to see. Well, I don't want to see that anyway. Oops, let me get my phone before we see. That's what we're looking for. An explosion out of here. Nope. I don't want to see it drag back there. Just because I don't want to see it get back through here. This is my whole support level. I don't want to see that level broken with a body on the downside. So it really has to start pushing. Get up there now. Good morning, Hadit. How are you doing this morning? Not too bad today, buddy. Thanks for asking. How about yourself? Your family's okay? Everybody's good? Doing great. Yes, excellent. All good. Nope. Got excited there for a second, but no go. So now we've been through this once, twice, and we're popping through it again. So we'll see where that closes in 45 seconds. If you look at this hourly here, this mean threshold, I want to see that hold, this mean threshold hold, this one, they're all like overlapping areas that you don't want to see a body get through them. So if we come back and tag this hourly, what is this? This is the new week opening gap here. If we tag that new week opening gap again, maybe the consequent encroachment of it. So far the bodies are respecting this. The wicks doing the damage. Would have probably taken me out right there anyway. So now I got to wait for this structure here to break. Either we're going to run through and take out, continue going higher, or we're going to take this low out here and use this little area right here. I'll end up moving this down to here. And that to there. And we're already starting to wick through it. So there's a little tiny bissy down here. Not really the side I'm interested in. I'm just interested in this piece here. So we'll see what happens. Everybody's safe over in Iran. Hadi, hope your family's safe there, man. Morning, GK. So we're back into this discount box, fully filled. We have equal lows here. So far, this is still looking good. There's no go zone. I still want to see it hold now. It held here and then finally drove through it. So you think, okay, if you just come back and find some support at that and into that little imbalance, I want to see that hold. And so far, the bodies are respecting that little imbalance you see right here. And you had a couple of wicks through, but the bodies are still respecting it. This is sloppy for me. I want to see that just tag it and leave, not just bang around inside here for a while. So this could be the next leg lower. And that would put that at 76.87-ish, which will fill that whole new week opening gap up. See how the fill of the new week opening gap is right here as well. That fills it all up right there. So we'd have to see this break through here, come back, find some support at this one more time, and keep pushing lower for us to get on board with this running lower. And for now, I'd have to see this break this 76.98 level on the upside. I think that's going to have a little jammer up here. All good, thanks. Excellent. I'm looking to see price come lower first, then rip higher for previous day's high. We quickly deleted that. Then rip higher if it fit the weekly range. Yeah. So far, still holding. I see how we've had a little body get mellow here now. We're still inside the SIBI. Let's go, let's go. I want to see this mean threshold hold price back. I don't want to see any bodies getting through here. Mm-hmm. And what's in queue up to this morning? It's waiting for 9:30 as well, I guess. See how we traded below it, above it, below it, into it. So now you want to see this. Right now, if you're staying on the horse, you'd be like, that's going to go lower. Now it's going to go higher. Now it's going to go lower. Check lower. Wait for this low to get taken out. Pay yourself at that low. Not that you would be in this because you're in consolidation and it's chop. So wait. We have a high taken out. Change in direction right here. Body traded below. We've traded back inside it, inside the no-go zone. And we're running for that low. Pay yourself at that low. Move to break even. Would have taken your stop loss there. If you kept your stop loss above the busy and above this no-go zone, as soon as it breaks the low, pay yourself. Move to break even and then see if this continues going lower. So again, you have to demand that price give you what you're looking for. You've done your thing here now. You want to see it continue to leave. If it keeps coming back into chop, at least you paid yourself a little bit there and you expected to see it go lower. It didn't go. So you're covered. We finally popped through here now. There's that. We're right inside that BISI here. Not interested in that. Now we look for this little retest in here. And this, and we mentioned if this, we get below that previous no-go zone we had up here. Next one's a lower. So now we're trading back into it. You want to see that come lower now? You'll get your low now, the D. We'll see what the 9:30 open. 9:30 gives us. Just gonna start putting in some of these 6 a.m. candle. marking out all the essential midnight opens. These are all cute areas, especially this first presentation for value gap and the 6 a.m. candle. See how you chopped up on you now? Reverse, we wanted to see it go lower. Going lower. Keeps chopping back through there, come back into the mean threshold, and we're starting to get our run higher. This is when I hate it, when it chops through these zones. It's not acting cleanly. So now you gotta wait. I like this level here. We broke above it, came back inside it, run for a rejection block, pay yourself there, look for a run above the high. So now what I want to see is this 699 level get closed above. Mardeep, good morning. There's another retest of this. There's the tap. That could be below here. This whole zone here. Mean threshold's my line in the sand here. If this one fails, then I'm gonna sit and wait till 9:30. We've been through this 1, 2, 3, 4 times. Got to the rejection block. Change in direction above that high. There's the line in the sand. Not reacting off there very quickly, is it? So now I'm going to put my stop loss right on there. Literally came down to the line in the sand there. Now it's got to get back through here. So you got to cut your losses now because it's offside for me. So I got to start cutting my losses. So I got to hope this keeps pushing higher. If not, then no. So we're back into this chop again. So I did not get the lift I was looking for. You didn't want to see any more than that mean threshold get broken to the downside. It did. I gave it this as a wiggle room. It went all the way through it. Body, it actually popped below it. So now look at this. Look at that lift you're getting now. Right back into here. So if this runs back through here now, you can see why that mean threshold held. And so that was literally at the line in the sand. So again, you could have chased that back up and get break even, but it came down and got me there. Now I'll wait till 9:30. So now it's this the tap. Now go. Gotta start running now. What else is down here? There's nothing else down here, man. Maybe here? I'm looking at 7698.5. There's the full fill of that. Get going. Rip it up, man. This is an 18 candle. Let it go. $18 makes a high. 19. Give it a little tip below that and then send it up. And look for 2021 up here. Big explosion candles in the next 2 to 3 minutes. I'd like to see them pop. Nope. Welcome to the chop. Wait for 9:30. I think 9:30 is going to be a real big explosive pop here. Get a nice good slam upside. You might get a little pop below you here, Hidi, and then a big run up. Just what you were looking for. What level are you looking for that to run to? Oh yeah, okay, I can see one here. $215. I can see 293, 262. Back in the chop again. Open and closed right on it. Came back, filled it. Dropped down. I don't see anything in here except for this mean threshold here. Again, so if that holds price, or if we pop through that, we're looking for these equal lows below us. Yeah, I think you'll get it, Hidi. There's some logical places for it to reach for here, like this 76.92, 76.90. And the worst to worst is 78.86. I don't see that get broken. Retouch these old highs here. And NQ. NQ. Yeah, NQ's is the top of the weekly. Gap is 280. 274 would be the consequent encroachment, 284. And then the mean threshold, you don't want to see that get broken, which is 245-ish. It's also the open of that or close of this candle, this last up close candle here. And that would put you in 270 right there. That's that number we're looking for right there. 272. That's right in the midnight open range. So anywhere inside here, some good data points. You want to see whole price and send that higher. That's Monday's open. Let's see how we're stuck between the Friday, Monday, and then Tuesday's down here a bit more, is it not? Nope. Tuesday's higher. That's good. Is Tuesday higher? Or haven't I marked Tuesday in here yet? I have not. My bad. Stand by. This is the 6 a.m. candle. I put that all on the 5 more minutes. Should be able to get this done in 5 minutes. Yeah, it is lower. Okay, so here's Monday's new week or open range. Come on. Buzz, man. Slowly, with patience. Click. All right. Just move this out of the way a little bit. Doesn't matter where this starts for me right now. As long as it's got the borders marked and my midnight open is tagged. And then our Tuesday, done and done. So we're down here still. That's a little lower than that we were expecting. Bouncing off an old premium array here. This is the consequent encroachment of that. Here's a retest. Let's see this range extend now. Consolidation. First little displacement, retest cam model 1. See if this continues lower. I'm not touching it for another couple of minutes, but there's a cam model 1 right there for continuation on the downside. So consolidation, attack model. We have a nice displacement candle down below. Body closes below it. You come back, you retest the wick to the body is model 1. Model 2 is take 50% of that range, which would probably be around here. You'd have to go like this. Take the low to the high of that, and then extend it out here so you can see the 50%, and that'll be your cam model 2. So right up to 332 will be your model 2. And then you want to see lower prices. You don't want to see it close through that. If it closes through that, it's coming for your stop loss. So cam model 1 right now. Let's see if that continues going lower. And whatever your downside targets are, beautiful. Now move your stop loss to break even because you're 2 minutes, or we got the open now. So if that snaps back against you, your cam 1, let it keep running. If your stop loss is sitting right there, it's break even. You pay yourself whatever your targets are down here, like that high. The open we mentioned. 1, 2 was right here, 264, 270 I think it was. What's this one here? 279. Let's see what ES hit. Nice, right on the top of this candle. 692. Now let's see if it bounces off of there and sends it up. We can get back through here. There's your little run lower, Hadi. Took out that low. Perfect. Now you want to see if it starts to climb up out of here. So far so good, Hadi. Good call, man. We'll wait and see what the shenanigans are. See how we've traded back up into the BISI. That's the one you want to see support to go lower. This one you want to see close above it, find support. And because they overlap, you want to see both of those get closed above. That becomes the inversion point to see it go higher. So it becomes the no-go zone for going higher. We've come back, we've retested this no-go zone again, and again. The next spot after here will be 690 if it decides to get down there. So you got to see this breakthrough here now. Then this leg you see coming down here, that'll be cam model 3. You got to see a displacement above here. Cam model 1 touches the wicks to the body. 2 is the mean threshold of that consolidation, and 3 is whatever this leg is here. Take 50% of that. That's cam 3. So that would be something like this. And that puts you right smack in the middle of that sucker right there. That's 697. But again, it's very choppy, so wait for something clean. Yes, indeed, Hadi. Looking for a big gunner. But you can't marry the idea. You got to be prepared to stay on the horse and watch. If you marry the idea for long and we don't get it, we have to confirm, are we still getting our objectives met? So I want to see this consolidation break to the upside on a 5-minute and get back through this no-go zone now. So that this now becomes the no-go zone. Oh, my voice is changing again. So here's the 5-minute no-go zone. See how we've traded through it and back into it multiple times to go lower. Took the lows, pay yourself at the low, or pay yourself at that low. That's your model 3 for an extension. And then the continuation would be trade back into this wick, halfway through the wick to the body, half the body, and then the 3 levels inside here to go lower. If it breaks through that, you've got your model 3 already. You've extended the range. It decides, that's all I wanted to do is just gather up my liquidity down here, fill the rest of this BISI in, send it back through here, use it as support. Then you want to see that as act as a model, CAM 1 model, and then look for a mean threshold of that candle. If you take that out, I'd be looking for the top of this candle here again. See how it came back up right into that imbalance right there? Stretch it out. You'll see it on a 5-minute chart, that little tiny imbalance. We hit it. It went lower. There's one little tiny portion of it. Nope, it actually hit the whole thing, cleared it. Beautiful. So it was a perfect tag and then snap away from it. Cleared out the lows finally. Bounced around for a while before it finally cleared out the lows. Now we want to see if this little low run here was all we needed to see to start pushing back through here. So it's mean threshold, and that big candle right there is a good little launch spot for running higher and taking that rejection block, half the wick, and that new day opening gap above you. Otherwise, chop chop. Stay out of it. Yes, a D, an A+. No body above here yet. Excuse me. Then queue up to, woo, there's a nice little turn. There's a nice little retest. I like that for a long. You're gonna be way back down. Ooh, that's a big sacrifice though. Way down here. I do like that area. We'll take 1,000 out of that. That's just a nice little retest there. I want to see it get back through here now. That just clears up some of the losses I took in that last one. I think it was like $800 down or something like that. That was 1,000 out there. So let's see if we get back through this level. Right inside that bull trap right here, and that premium hasn't been hit yet. So a nice dig down into here. We've come back. See how we broke above here? You came back in, tagged it, and went higher. That was a nice little entry for a long. Pull your fib on the whole range. Look for 70% off from trade entry reversal. In other words, from here to here. Oops. From there to there. There's 70% off from trade entry reversal. So if you entered in here below 50%, as soon as it hits 50, take some of your trade off, move to break even, hit 60%, move to 50, 70%, move to 62, didn't quite hit 75% and it came back and took you out. So you would have got small range apples, low hanging fruit in there to optimum trade entry reversal area, and now it's reversing. Now typically you want to see that just keep rocketing out there, get through this one, look for a model 3 and look for range extension, and then a model 4. The fact that we're chopping all the way back into that zone, that's the right there is where you don't want to see it get through. See how it's chopping through it again? Not what you want to see, man. That was down 6 and that was 12 at 60. So not acting the way you want it to act. That's definitely not acting the way you want it to act. Wait for something clean. So this is our, if we're hunting for that model 1 setup, what we want to see is a low taken. You see a SIBI forming right here. You see a body break above it. You want to see a wick come back into it, tag it, and leave. And you mark it from the low, or the high of this, the low of the SIBI, or the high of this candle, which makes the bottom of the SIBI, to that imbalance right there. That's the SIBI. So as soon as you see a body break it, you go, great. If we could come back and tag it, I'd get long there. So it takes out, runs back long, and you start targeting your 50, 62%, so on and so forth. So the bodies are respecting that SIBI fill. Wick did some damage all the way back to mean threshold of this candle. And there's a tiny, tiny little imbalance right here. Stretch it out in your, you see it right there? People ignore those all the time. All the time. But you can't. You have to stretch it out sometimes. Keep your eyes on those little areas. Sensitivity. Now you want to see it really jam through that premium level. So what's our ES up to? Is that giving us a final run out of here somewhere? Nope. No motivation to move right now. So we're still chopping around in here. Again, not super clean. I don't even like all that wick. That ran all the way down to a line in the sand where you don't want to see it break that on a body. Wick came all the way through, tagged it, and now the body's respecting this. SIBI. Still saying we're going long. That's still a long setup. So if your stop loss is in here, typically you put your entry 1, 2, 3 different entries, and your stop loss goes below the low, and then you wait. Your line in the sand is the mean threshold. You don't want to see that get broken. In other words, in case it snaps down really quickly and takes out your stop loss, your fail-safe is your visual representation of where you don't want to see price break. If it does break that price on a close, it's coming for your stop loss. That's how you have to look at it. So clear out your stop loss. So your fail-safe is a point at which you expect to see a data point hold. It's your lits, your line in the sand, where you have to be committed to holding that line in the sand and waiting for it to go back. And that came all the way down to that line in the sand, bounced off of it and sent it higher. So if you're in this trade and you see it chopping around like this, you've got to get yourself some, pay yourself at the mean threshold of that candle, because it's the highest data point here other than the rejection block, which isn't much. And you've got that old bull trap. That's, see how it came back up inside the bull trap, held it, also known as the breaker here. These up close candles ran down, took out all these lows. That's the breaker. Came all the way up inside that, snapped off of it. It held price, so the bull trap held, dropped it all the way down. Now the bear trap is down here. Bear trap's mean threshold, it holds. So that candle against that candle, well, that group of little candles, snapped it all the way up. We came back up into the highest candle in this little swing point, which is mean threshold. That's holding. Send it all the way back down, and now you're looking at this candle here. So I'm in this small little pop. Watch the mean threshold of that. See if that bounces off of there. See how the bounce? That's the mean threshold. So like to like array. And now you want to see if that comes back up and we're inside this range. Watch the mean threshold of that candle. Now we're compressing. So you're between this one here and this one here right now. See how we got this little swing point here? But there's a little swing point there. You know, 3 candles make a swing. We have a civvy forming. You run above it, you come back inside it, all the way down to the bottom, right into the line of the sand again, like we did here. We got this one, line in the sand we came down to, this one here, line in the sand we came down to. Now you want to see that level right there, get tagged and punch through, and then start targeting these relative equal highs above us now. That's if you're trying to you're staying on the horse and you want to see it keep pumping. See there, that one's done now. Now I don't want to see it just get in rejection block and then pop into rejection block down here now. I don't want to see that like to like array. I want to see this one give up and keep pushing. That's what I want to see. Whether or not we get that, we'll wait and see. Good. So keep pushing, keep pushing, keep pushing. Now I want to see these equal highs get taken and then start targeting that premium above you. Good. Hit, broken, done. Pay yourself there if you were in on that kind of bullshit. So even in consolidations, you can still catch or still see where price is going to move to. If you stay on the horse, stay on the data points, and they're very specific. Believe me, the better you get at doing it in this kind of choppy environment, and don't just ignore it, the better it'll help your long-term trading. And we have another downside, an opposite side regular trading hour gap. And we have not hit it in the first 15 minutes. We had this exact same thing happening yesterday. We had a little wick into there, and then and it was above us, and we went lower. This time we have a little wick below us, and now we're starting to push higher. Exactly the same as yesterday. Keep pushing, keep pushing. This is sloppy as hell, but at least it's moving in the direction. If we're staying on the horse, we're at least looking on the right end of the horse. We're not straddled it, looking in the back. That's what we want to see. Target this area here. Nice, done. We caught it right here. We're on the horse. We saw the bounce off of these 2 arrays, or those 2 arrays. Next thing is you have to see it drive through here. It hit it. Now you want to see it keep pushing, break through here, and take out the equal highs. It did. Targeted this level. It did. Now I want to see it come back and tag here and here. Right there. So that's cleared that out. That's good enough. That can send it up from there. I don't want to see any more. Again, you want to see clean price action, no more than 370. Is ES finally breaking out of here? It is not. It's chopping around. So NQ is still playing inside the range. It's come from box to box, albeit sloppy. It is definitely inside the box to box run. You see that? Right inside a 6 a.m. overlap. So that's your model 1. Lows taken, sloppy, but nice tag back into it, send it higher. Box to box. Now you're looking for a model 3. Watch right here. We're going to put these as like little steps. You want to see hold price. we'll start moving it. Yes, there you go. Punch it up, man. Punch it up. Look at the hourly chart. Look at how that came down. Tag this high here and left. That's what you want to see, baby. Now we're waiting for a Model 3. Don't take the high just yet. Sit right there. Come back. Give us a Model 3 entry. Yes. Are you moving yet? Yes is like, all right, I'll start coming up. Oh, I opened and closed right on it. This could be just a simple tag and go. That's already extended now. We're looking for a Model 4, so forget your Model 3. Look for a retest of here. You don't want to see it get below the 6 a.m. now. Let's go long on that one. And I want to be just below here. It's a retest of this. Our line in the sand is right there. Oh, came right down and kissed us on the nose. No. Change in direction. Took out a high. Got to watch that right there. Closed there below our spot. Now you get back in sync with it. You can take losses, man. Now you get to see that now. So change in direction here. Keep your eye on that part. Broke down below it. Come back, retest, and see if it comes lower now. There's the retest. Back into Friday's first presentation. And a sloppy, sloppy price. Those wicks are killers, man. That's definitely below that bull trap now. And we're definitely below this level you wanted to see hold price. You guys get to see me take a hit anyway. There's the premium hit again, right there. Retest, go lower. Where are we going for 10 o'clock now? Box to box. And box. Stay on the horse, man. There's 50%. That's a premium and a discount inside there. That's why I'm picking this range and not this one. So had I taken that there, that would have taken the loss I took coming back down. That would have balanced it out. But I didn't. It's super choppy, so if it's not acting the way you want it to act, then you stay out till you see something clean. What's ES up to? Chopping around. Let's see what oil's up to. Ooh, my goodness. Somebody's getting bounced around there, hey? A little swing in market structure. Retest this candle here. Run lower. Look for a retest on this candle. It did not. It just ran straight through the lows. Wait for a retest on this BISI here on the way up, all the way to the mean threshold. So what you want to see here is a 4-hour candle. This next 4-hour give you an institutional order flow all the way up to the bottom of that candle there at 83.48. Like this. If you can get a 4-hour run to there, look for a reversal on the lower time frames for a continuation on the downside. You don't want to see more than half that wick get taken. In other words, you don't want to see this all fill in now. Tag it, go lower. And we're looking for, I'll put the next one in here. That's the next downside you're looking for. Gold. Gold give you a turn here, took those highs out, change in direction, change in direction. You don't get either one of those. It just keeps running. So then you look for this, a body to take out this candle's low. This one takes out the low. You come back inside it. Wicks do some damage. Does not take out the high of the candle though. And then finally back and forth here for a few hours before finally taking out the low. Looking for right here. I'd expect to see if this could come back into here. Look for, see if price comes back into that. And sends that lower. If it takes out this candle here on the downside on the close, look for a retest in this whole area here to keep coming lower and bring gold back down below the lows. If you get back through this level, look for a retest 50% of that wick there. So if you're looking right here. If you get through there, target that. Bitcoin users. One hour. Change in direction. Nice little Bitcoin entry there for a short. That's a nice little run there. Or run back into this range consolidation, 50%. Wait for it to break through here and use this level and that candle as support. Model 4 will come all the way up inside here. Or Model 3, sorry. Extension. Here you close below it, popped into it, send it lower, take out the lows, pay yourself. Targeting this next area down below you here. All the way to here. I'm going to put this thing here to right there. That's the area you're looking for. You've hit it now. You want to see a body stay below here. Use this to attack it again and look for the consequent encroachment of that. Dixie. Let's look at the Dixie here. Dixie ran higher. We're looking for the euro and all that yesterday to go lower. And now we're looking for this to, the Dixie to go higher as a result of this change in direction here. Trade back up inside it, trade lower, look for this candle here to provide some support. If this candle in the next 30 seconds closes below here, look for a retest of these equal lows all the way into this candle's mean threshold, and then send it lower. That should put pressure, allow these guys to open up and start closing higher. So if you look at the difference between the euro and the pound, which one, if this was going to go lower, which one is most likely to be your star support candle for today? Go into the euro pound. You look in here, pound is stronger, or euro is stronger. Euro is the first one in the pair. Euro is stronger than the pound. So euro pound has come back into a discount. This is a Model 1. So we're hunting from Model 1, as our title of our show is today. Hunting a Model 1, lows taking, change in direction, enter, long, pay yourself at the highs. And now you want to see, and it came back in again. Now we're looking for higher prices and euro to do the damage and pound to sit still. So you want to see euro really start climbing out of here now. Take out these equal highs above you and then start targeting the mean threshold of this candle, which is 85.60. Then look for the equal highs. That's how I'd look at that. So you want to see that just come up in here, pop in there, tag that, and then snap away. That should be coming back into our last up close candle. Bodies run through it, come back inside it, no more than the mean threshold, 85.54, and then send it up. Let me put that in there as a line in the sand. Stop loss would go just below the low. Oh, sorry, first candle to the left is this guy, not that guy. But we do have a body broken above that guy, so we have to use that. Stop loss would sit here. This one's been worked already enough times. You don't want to see it come back into here again. It's been worked. So that's the next level of support you're expecting to see for euro against pound. Toronto Dominion, we were looking for this candle to get tagged on the downside. It did. Now looking to see it get used as support to come lower. Oh, we've already talked about that. The DAX. DAX is just about in the next 12 minutes. If it closes below this level right here, look for a retest of that level for a continuation on the downside. Looking for more downside in German DAX. So I'll keep opening up here. HNC still sitting inside that. I like that, though we're above our BISI. We're using that as support. We're stuck inside that little guy and this guy right here. You want to see it close through here and get on top of this candle and use it as some support to start targeting that premium above you here for 11:30, anywhere between 11:19 and 11:33. All right. So we ran through our level here. We did not take out the high. We just wicked above the high. So you didn't get it. You got your 3 but you did not get a model 4. It came all the way back through, traded through here, change in direction, went lower. So mean threshold right here at 209. Let's see if we get 209. Swing, broken, retested. Model 4, look for an extension. Or sorry, Model 3, look for an extension. Model 4, come back, retest, look for continuation. There's a couple of Model 4s and 3s in there. The Model 1, which is wait for a high to get taken and look for, there's that high. Change in direction right here. That's a Model 1. Title of our show, hunting for a Model 1. Wait for a high or a low to get taken. At time and price, here's a macro beginning at 8 or 950. Right here, boom, 950 macro begins, retest into a level. So that's actually one of those macro trades along with a Model 1. High taken, Model 1, trade through, come back into it, send it lower. Also in a 6 a.m. So you talk about confluences. You have time, you have price. So we have confirmation Model 1. And what gives us our Model 1 entry? We have a 6 a.m. overlap. We have a Sunday new week opening gap. We have a premium level. We have our Model 1. So you have multiple overlaps there that support time, price for continuation on the downside. And I was too busy yakking through all this lot. So, but anyway, that's your reversal. And let's look for, one thing I haven't put in this morning is the silver bullet. And I haven't put in the first presentation. 9:30. That's 9:31 right there. That's the 9:30. Traded through it, tested it again, sent it lower. Now what I want to see is whether or not we get, where's our silver bullet entry now? So that's after 10 o'clock. Here's your 10 o'clock. 10, 10:01, 10:02 right here. So here's your silver bullet. So there's a retest there. Drop below it, trade back into it, send it lower. Now I'm looking for this 209 level. Right back into this whole go no go zone here. Premium array. There's an old premium in there. Get rid of this one. That looks like it's been utilized. We're coming right back into the top of the hourly. bull trap that we got through the first time to go higher. Now we're looking for it. It's just chopping through here. That's the line in the sand for me at 209. And we still got 50 minutes left of that. Nine took out the 10. Or 10 took out the 9. 10. Right there. Looking for a reversal now. I'm looking for a change in direction and send this back up higher. Would put me here. We're going to reverse engineer this again. Will that take out the highs from yesterday? Yes, it will. Yes, it will. That will be the nice little delicious pump up. If we hit the 50% of this, that'll be enough for that leg to continue higher and take that out. Let's see if the wicks behave themselves. That's a nice little pump off there. I'll take that as a retest. If I can get back in here, I'll take that for a long. Again, touching an old wick. We've done it once. This may not give me an opportunity. This may just snap right out of here. We close above that candle. Oh, I missed this little guy right here. There's a little tiny imbalance right there. Boop. Let's wait till we get a body above here. If not, come on back here. Give it a little tag. And I will go along on that. Stop loss will go here. Again, time and price. There's a small little sibby right here. That's the silver bullet. I want to see the silver bullet hold price now and send it up higher. If this chops around inside here, not interested. So this is the Model 1 we're hunting now. Come on, you got to punch out of there. This whole bouncing back and forth. This is the tap and go I was telling you about. I want to see it just tap it and get the hell out of Dodge. Higher time frame. We've hit an area I want to see a reversal at. It's a 10 o'clock candle. I see a reversal. I have a silver bullet. I have multiple different confluences that say that should support price to send it higher. And it fails if we get back through that little imbalance, that little tiny guy down there. It fails if we close below that. It'll take my stop. And I'd have to be done for the day. Mean threshold. We're right into it now. See how we drop below it? Pop back into it again. Chances are it's going to come for me now. Let's wait and see. Done. Jesus. Did not give me the support I'm looking for. So again, we're back to this mean threshold at 212. And if we lose that, then we're back into the SIBI below us again. So a legitimate place to look for a long. Didn't work. Failed. The moment we see it pop through there, you go, ugh, that's not good. You don't want to see that. Came back, took me out. So now we're waiting again for a new setup. I'm looking for down here at that 212, 215 area, a mean threshold of this last up close candle, and we'll see if that holds and look for a reversal and see if that reverses around 1027, 1030, 1032, the crazy Ivan. So I want to see that turn here and use the bull trap as support to go higher. So wait to look for that opening and then see if we get a 1030 turn. And again, you'd have to get back through your silver bullet, midnight open. There's lots of key levels right here. So if we get a nice little run through here and back and find some support at that, then I'd be interested in going long again. Play the stats, 50% of the, oh yeah, the whole regular trading hour gap. Wasn't even looking at that. That would be down, where would that be in your, that would be the mean threshold of that. That'd be the mean threshold over here, right? $209. I keep saying 209, 212, 215. That puts you just above that 50%. What's ES up to? That's super choppy as well. No clean entry, man. I've been killed. I've been kicked 3 times now. What have I got on here? 1, 2, 3. Yes, 3 big times. 4, 5. Oh no, 2 times. I'm down 3. Not gonna get that back. It appears the market maker X model, sell model low, and the MTH of the regular mean threshold of the regular trading hour gap. Yeah, that looks around 202. Well, it's sitting at 202. The top of that midnight open range is sitting, oh no, at the bottom of the gap, the old go no go zone is sitting right at 202. That's 203. And it puts us in our midnight open range. If we end up driving deeper into that and we're looking for this SIBI again, look for this midnight open, today's midnight open at our first presentation here, which is seems to be the draw on liquidity right now. We came back, that silver bullet's getting worked from both sides now. But I see it did do the last fair value gap from 415 1 minute. 415 1 minute candle, 415. $222. That premium high down here. This old premium down here. Well, we're starting to enter into a lot of little data points. We're expecting to see a nice bounce off of. And we got, oh, it's 3 hours. We're right back through there. Look at your 4-hour chart. Man, we got so many different directions you can go from this 4 hours. Well, no. At 3:30 or 2:31, 2:32, where it's hitting right now. That's the 4-hour bounce off of the close in the bull trap. We've come all the way back to the bull trap 4-hour right there and bounced off of the open right at the 6 a.m. candle. So its mean threshold is right there, 215 again. At 215 level looks like it's here on the hourly as well. The 4-hour, the 1 hour, and a dip into there puts you way too low in the 4-hour there. So we're through that open. Oh, I tell you, there's so many, I see so many bounce areas. There's 218, 217, 215's right here. Right there. Ignores 215. We're looking for that 209 level. 212 level. This whole area right inside here, we're looking to see what kind of reaction to get, because it's the mean threshold of this bull trap. It's also the mean threshold of the around the mean for the threshold of the 4 hour. All we've got is this SIBI below us, so we'll see how it acts here now that we've took out that little low right there in a key level. I want to see if this, and we're sitting at our 24, so we're getting near the bottom of the hour here now. See if we see a reaction off of here. Look at that, right at 215 there. We've got a nice reaction here, so wait for this. That's a model 1, and it's close to your bull trap and a whole bunch of traps sitting in here, so you got to wait for a nice little pop above the midnight open in the 830, I think, before you consider going long. But the first open's right there. And again, it's another key level we're looking at on the higher time frame. We're looking for an opportunity to see if that now gives us some support at a higher time frame level. I'm expecting to see a bounce at. So this is the bounce we're looking for. So now you want to say, do we have a reversal in the next 17 seconds? Do we come back and hit here? Or do we wait and see if we get a pop above here? So we're getting a nice little reaction off of that level. Bull trap sitting right here. You got to come all the way back into this level, right into that 8:30 candle and your 6 a.m. candle. And if it doesn't and it stays open, look for the next candle to come back and tag in here. Mike will be looking right here. We're looking right here. And then we're looking for this bull trap to let go. Okay, mean threshold, hold price, bring it back down. This is our 27 now. Bottom of the hour. Crazy Ivan starts here. I just want to see it reach into here. There's the 6 a.m. candle tagged again. Just pop it down in here. That's tagging the top of it right there. There you go. There's the bottom of it. Let's try 3 there. And I'm just below the mean threshold of that candle. You've done your thing. Get the hell out of Dodge now. I'm going to see a quick drive out of here and take this. Good morning, Hans. So this is the model 1. We're trying to catch again at a key time, higher time frame, support level. And if it starts to eat through this again, I'm getting hammered by choppy price action today. I'm demanding too much precision. and the wicks are taking me out today. That's how I'll look at it. That's not what you want to see. Line in the sands there. Fuck. No go, man. I'm sucking it today. Totally biting it today, you guys. You guys get to see me get my ass kicked today. Here's a 30, 30. If this fucker turns right here now at the bottom of the 30, what level am I looking for? There's that damn Sibby below us again. This would be like a... That's not even a box-to-box trade. If this comes down here and then finally runs back up through there, that's the hourly range. Look at that hourly. Look at that. Now we're in there. Good thing you didn't leave an open stop loss on there. Hey, that would have just wiped out $6 grand. There's the civvy. Okay, now you've done your pissing around. Now are you going to get out of here? Or are we just going to keep running lower into a 17 candle? I've been trying to chase a high, marry a reversal that just wasn't there. Turn. Support, support. Multiple areas I've been looking to try and get in on, looking for an entry, gave you the entry, and then took it away from you. So now there's your discount box has been hit, and the mean threshold of that has been hit. Like if I pull my fib tool here to here, consequent encroachments hit perfectly. Now I want to see if that gets a reaction off of here. Crazy Ivan, look at this sucker. Right at 30. 32. Wait for this to break. Yeah, ES took its holy. ES did a huge plummet down into the rejection block. I don't see much there. Here you go. Come on. Above this one, above this one. This is looking better. Get up there. Rejection block. There's the retest. That's a model 1. Send it up. Get it through here. You're so close to those two, so you wait for this one to break. Model 3, and then model 4 off that candle right there. You want to see a portion of this stay open. If that's going to go higher, you want to see that right there. It's that institutional order flow entry drill. Keep going higher. You don't want to see it come back down there now. 8:30. Now that's the tag. There's your model 1. 1, 2, 3 different entries. You'd have to take it right to the close of that there. Not what you want to see. You don't want to see it come back and fully fill in everything there. It's rebalancing this candle. And see it's chopping into here again. That's totally not what you want to see. Ugly wicks. That turns into a wick now and goes higher. Ugly. Did not break the high. Did not break the premium level. Just hit it. Wick through it. Now we're back into here. So this now becomes the no-go zone for lower. It's a choppy day, man. What just happened? Did a dive down at the bottom of the hour. Crazy Ivan hasn't really given us much. It came for a look back, didn't see anything, and we're going to continue going lower now. I told you it's going to be a choppy week. And tomorrow, if this ends up as a down close day and we take out yesterday's low, tomorrow you want to see Wednesday reverse, and then Thursday a reverse again. It's a squabbler week. I just want to see this candle end up high so I can see tomorrow's candle come ripping down, heading for the new week low. Tuesday makes the high of the week. Wednesday makes the low. Now we're above there. Tomorrow some 3-star news. Yeah. Chop, chop. Yeah, I agree with you, Hadi. It looks like a long. It's a model 3 for a run above that high. Body's above here, yeah. Let's go, Hadi. I'm with you, man, but I'm not in it. I'm going to wait for this to break above here. So far, so good. Where's a retest? I'll go with you. How's that? I like that level there. And I have to be back below here. If I take this as another hit again today, I'm done. I'm out. I'm finished for the rest of the day. So here's a retest here. That's what we're getting in on and looking for that to run higher now. Pay yourself at the high. I'm going to break even right there. Let it run now. It's cleared the high. Go to break even. Now I want to see this candle act like support. So I don't want to see it come back and fill this whole thing in here. We got some legs punch through here now and start getting above these bull traps. But you want to see it really aggressive here, and you want to see this stay open. Yeah, I'm with you, Hadi. Let's see if we can make back some of the loss we took this morning. Come on, punch it out there. Just go ripping, ripping, ripping. One more of those. That'll break us even. $22 seconds. I like this. Stay open. I like these getting punched through. Look for this. This would be an awesome little run up into here. 6 a.m. candle way up there. That would be a dynamite run. Institutional order flow entry drill. You want to, A plus would be just leaving from here right now at Hadi. A would be a nice little, there you go, right there, retest and punch it up. You don't want to see it go any more than right there, 246. $246. Send it up. It's got to maintain a portion of this open. It's not a good sign, and it wouldn't surprise me if it just comes back and closes it out here just to annoy us. There you go. Retesting this again. You have to wait for it to break through here. Find support. Model 3. Or we're going to come lower. I hope you got out of that too, Hadi. We're back inside this one again. Send it back up now. Bottom of it's right here on that midpoint. Right there. See if that snaps off of there or goes through it. I don't even like the little pokes through that. Still coming down. Still coming down. Good for you. So that's a nice little pay yourself at the highs. Each subsequent candle, pay yourself at the high. So you managed to get some portion of that off. Now look for a retest of this low or a pull back into this no-go zone here. And let me get this one, old one, out of the way here. Or remove that. And I can remove this old premium in here as well. Let's clean it up a little bit. So what kind of reaction we get off of here. Come on. I don't know why this suddenly is so freaking slow. There's the retest. Now you want to see that go lower. I like that for a Model 4. It'll be above the 30-minute. I don't want to see it rip through here. The way the everything's chopping though, that should come back and slice me up. But I want to see this no-go zone hold support and then start giving me another range extension. Looking for a run down below here now. So this is a model 4. And I don't want to see it break through the other side. But if the wicks are doing this, the damage they're doing this morning, quite easily come back. I'm demanding really intent specific price action. 1, 2, and that's it. And I'm sitting right there. And there's a SIBI there. There's BISIs above us. All that stuff it can reach back into. But if this is a solid 4, that should just leave and start going lower. Hopefully right off that midpoint there. And aggressively start moving. Next macro is about to begin. This should be a puncher. This should just start slamming down. I don't want to see that start ripping back through here again. We have swept a little low here, and we've got a SIBI sitting right here. If we close back above that, that'll take me out, and then you're looking for box to box internal range, and that's just too much chop for me to handle for the day. See that? Already through it already with a wick. I'm getting out of that. That's what it's going to take off now. Too choppy for me this morning, you guys. My levels demanding for these precision levels are just not happening. You're getting the touches and the wicks and the slop. And believe me, you get some super clean days, but then when you get wicks that are doing this kind of damage, the precision levels you demand are going to get hacked. So just wait for it to clean up some more. I might have to wait till after lunch now. We're getting close to my end of day. And I have 1, 2, 45. Daily's right in that consequent encroachment of the day started in there, of the volume imbalance over there on July 23rd. There's a volume imbalance over there on the daily, and we started the day at the consequent encroachment of that. We just wicked down and then climbed out of the day. So what are we doing here? Stay on the horse. We're back into that. Wait for the body to break through here. See, that would have taken out my stop loss eventually there. So I like seeing that. At least I can get myself out at break even. I think I made 15 bucks on that. Still, see how we've traded above the SIBI, trade back into it, right down to the bottom, and see if we start getting a lift for box to box. This is the one we were talking about earlier, saying if we start to travel through this, this could be a simple run from box to box, internal range liquidity back in the chop again. So hunting this area up here for a box to box trade. So this is a model 1 hunting for a take profit model 2. Take profit model 2. And if the wicks continue to make their mess the way they do, you do not want to see the mean threshold of this candle get taken, even with the wick. So targeting that level there. Perfect entry if you're wrong and it goes lower, comes back, tags it, get out. Because you're on the wrong side of this. This is the next leg lower. See, welcome to Chopsville. Body's still respecting it. Wick doing some damage. Still targeting this busy above us. Don't want to see the wick get through here. Look at that. Wick just slices through it. And welcome to the choppy days. I said it would be a choppy week, but I wasn't expecting it to be choppy on a 1 minute like this. This is brutal. Yeah, see you later, Derek. I totally get you, man. I'm gonna lick my wounds and get out of here and get back in tomorrow. We'll see if we got another. This macro is just beginning now at 8 or 10:50 here. We'll see if this starts to move. Look at that level there. I'll put the premium on there. And then you're looking for the consequent encroachment of that. I don't know why this is so choppy right now. There, we've tagged it. So we've gone from box to box. You pay yourself there. Watch the consequent encroachment there. See if there's sensitivity there or if it runs right through it. Keep coming. Clear this candle. Use the midnight open and this silver bullet for support. I like that area there for a continuation on the upside. Let's see if this gives you a model 3 here now. We'll give that 30 seconds to see if it closes above here or runs through this. Then you can look at this reversing all the way down into here. Your whole model 3, model 4 I'm looking for here now. As soon as that closes above there, model 3, 4. Two seconds. Literally open close on it. Bull trap. Come on, punch through here. There's a retest. Send it up. All the way inside here is good. Give me a retest off that candle's low or high right there. Good. Now go, 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 go. Did it touch it? Not quite. Yeah, now it's touched it. Right there. Fulfill. That is not acting the way you want it to act. I don't want to act that way. You had a hard, have you had a hard day? Oh man. Yes, I have. I've had a very hard day today, Hans. This is very choppy price action, and the wicks are killing me. The demand, the level of precision I'm demanding is just not happening. I'm just getting wicked to death here. So I gotta wait for something clean to happen. Otherwise, this whole chop stuff is not something I want to participate in. So I'm just gonna use this as an opportunity to keep practicing on when you see chop happening here. I want to see how much wick can I expect. Do I have other data points in here I'm not keeping in mind in terms of choppy environments? See how that L level there, you're already getting wicks through it. I don't even like that. So what are we looking for? This level down here hasn't been retested yet. This one's been worked really well. So do we just tap here? Inside there, there's the full fill now. Do we get a nice kick off of that and start going higher? Are we coming back all the way into this discount again? Box, box. You gone from this box to that box, fully filled it. No body broke above it. Come all the way back down into this box again. So you got this choppy box, 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 box action. So one little pop into here. There's the close of that candle. We're inside it now. So it's literally box to box to box to box. And you've got a small one up here still. We'll see if this holds and we get another SIBI forming in here. And then we go compress, compress, compress and wait for a breakout. And this could go right into lunch hour now, going back and forth, which means if lunch hour comes into play, we still have some more downside in the hourly here. If that takes out this 10 o'clock, if 11 just gives you a run back into this premium level here, and then 12 comes down, takes that out, and then sends it higher, or 12 goes up higher, I want to see it really run up high. If 12 o'clock is going to be the turn candle. See how we have that box to box, back to box again. And now this one we talked about up here. See how it just got tagged? And then it comes right the way back down again. So there's your premium again. So you just go box, 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 box. And now you want to see if we break through this and through that mean threshold, get on top of this and that. So you have two overlapping bull traps and you want to see it body get above them, both of them, get on top of these equal highs here and use this as support with a midnight open with the first presentation fair value gap at midnight and the silver bullet. They're all overlapping, and the 830. They're all overlapping each other there. So some nice strong data points that are holding price back right now, that if we bust through them and come back, we're expecting to see them provide some level of support. At least that's how I'm looking at it anyway. And I wouldn't trust what I'm saying right now this morning, because already taken a couple of hits this morning. So now this right here becomes the discount box. So that's the small little range that you're in. You hit premium, discount, premium. See how we just bounce back and forth between them? Run down here, just give this a tag down here. And we're compressing. I can see us compressing here. So we're waiting for this to break out from one side to the other, or one side or the other, and use these two zones as support. That premium and discount area, you want those to turn into no-go zones as support to launch higher. And we're in a consolidation now that we have the luxury of having a discount and a premium in there. So to me, that's good, because now I get to see if this will provide support to come lower, or this provides support to go higher. See that? Box to box to box. Here, 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 here. That's how many rounds of boxing you got. 1, 2, 3, 4, 5 rounds already. Choppy, ugly wick. See how that's the kind of thing you want to see, a precision tap and go. Came right back up, filled that premium right to the max, and then left. Fills the discount to the max and actually wicks through it. So is that a little hint that I'm going to continue coming lower? I have to wait for this little breaker, or a little, a little breaker here to last down close candle, takes this high, trade through that, through this, turn it into a no-go zone, and then see if we get some support off that to push lower. Remember that there is always a new day to trade. Yeah, there's always new days, man. I know these principles work. In these choppy environments like this, you're going to get your ass handed to you. So it's learning how to recognize. See, there's the retest. Now I want to see that go lower. So now that's turned into a discount. That discount's now turned into a no-go zone. So now I want to see, and this is the problem when you get beat up as many times as you have, or as I have, then you tend to go, I'm not going to enter into this anymore. I'm not going to keep playing in here, because you now have you start second guessing your setups, you start second guessing your techniques. So there's a model 3, takes the lows, pay yourself at the lows, move your break even, because you don't want to see it come back and tag that now. You want to see it leave. So you want to see it run all the way through the bottom of that now. So he's taking out this low. Next low you want to see it take out is that one. If it comes back and takes you out, you got paid. That's the rule. And that's the demand of the price action you want to see. If it comes back in there again, welcome to chop. You have to demand that level of precision. You got to leave now. So what this would be like a model 4. Model 3 is already extended down. Model 4, you want to see come back, tag that candle inside this no-go zone and start running for the next level. So you want to see this extension again. That would be a pay yourself at the bottom of that, and look for this target down here. So we'll kind of just pull this off to the side here and see if this starts to unfold the way it's supposed to. Again, that's the no-go zone. You want to see it go no. I don't want to see it go through here. And I want to see it run through. There's your rejection block. Now I want to see it take that low. Push, push, push. Keep coming. So you see how we were talking about premium and discount areas, and we're chopping back and forth, and I said we have to wait for one of these areas to get broken, and we have the luxury. Remember when I said we have the luxury of having a premium and a discount? Once one of those zones gets broken, it gets turned into a no-go zone. That got broken, turned into a no-go. We break through it, retest it, start heading it lower. That's a model of 3, 4. Depends if whether or not you took the lows before coming back and retesting that. You didn't, you retested it, go there, pay yourself, move to break even. It came back, either tagged you out, or you say, I just want to see a model 4 now. I want to see a body get through this candle or through this candle. It did, came back, retested it one more time. There, that's the overlap there. And then you want to see it continue to push through to take out the next low. Do we pay yourself at rejection block? That's your rule. Do you decide whether or not you want to take that rule and pay yourself there anyway? Or do you wait for the low? And see this constant coming back and retesting this? Not the kind of stuff, price action you want to see. That's choppy. You typically want to see it hit it and leave with intention. See how it hits it? You want to see this over here. Like when it went through there, that candle ripping through, that's what you wanted to see down here. You don't want to see this come back 3, 4 times. Again, you're still safe. You haven't broken this no-go zone yet. So you're still targeting this downside wick at 191. It's just sloppy, sloppy, sloppy. Like, look at all these attempts to get down there. What's that bouncing off of? That hourly mean threshold. See how the bodies are still staying above it? Wick did an ugly run down into that discount box. Told you, if you lose the mean threshold, look for the discount. That's the hourly, it does that. I'll tell you that on the 1 minute. That's the hourly did it. Ran all the way through to the discount. We didn't get all those opportunities I was trying to catch along on. If this closes here in the next 52 minutes, so we've only just started this hour, and we constantly stay above that mean threshold, and the wicks just did us all this ugly damage, that 10 o'clock is set, and then 11, 12 starts to make its run higher. See that wick through there? Not what you want to see, man. So anyway, that's it for me. I'm not playing in that anymore. It's way too choppy for me. Definitely not acting the way I want it to act. So tune in tomorrow, see if we get a better price action day. Sorry, didn't get the levels we were demanding, but I tell you, when it's clean, it is super sweet. Like, so this is the kind of stuff, right? You got a little swing, takes out these little lows here. There's the model 1, trade back up. You come all the way back inside, right to the very bottom of that little guy. That's the kind of stuff you want to see. Leaving right away with intention to get the hell out of there. You know what I'm saying? And then you get into welcome to the open. Look at all those wicks. See the difference between the two? When you start to see those super choppy, wicky type moments, you know that's a market that's just unstable. It's all over the place. Before the open, after the open. Look at the wicks. So when you're trying to demand very specific price levels, ain't happening. There's that no-go zone on this. If you're doing a model 3, As soon as the body breaks below that, it does right here. You come back, retest it. There's a clean one. And then you get all in this chop again. But that's a nice clean snap off of it and get the hell out of there. That's what you want to see. This is what you wanted to see right here. What we saw right there. Right there. Trade below it. Come back into it right there and leave. Leave. Here. Trade through it. Come back. Leave. Get the hell out of here. Look at this chopping back and forth in here. That's the kind of stuff you need to demand on your price action. If you don't see it, you're going to see, like I just got chopped up. I'm demanding very specific levels, and it's coming back and beating me up over and over and over again. Not that this model doesn't work. It's just when you get into this kind of choppy environment, you got to say to yourself, how many losses are you going to take? How much are you willing to lose? And if you lose it, walk away for the day. It's not your day. The market's not acting the way you want. Doesn't mean your setups are wrong. It just means you're in a unstable market and it's going to eat you up, and you got to be okay for that. So if people say, oh, it doesn't work, your shit doesn't work, that's fine. Because when you come back on a day that the markets are clean and price actions clean, you'll see a precision that's unbelievable. But anyway, don't make excuses. Just look for new solutions. That's what I say. Anyway, thank you very much, you guys. Sorry we didn't give you what you wanted this morning. Hopefully you get to see some losses, and I'm going to keep my eye on this. And those guys in the community, I'll post if I catch a good one this morning, later on this afternoon. I'm going to make back the money that I lost this morning. If I wait for that opening, I'll pick it up and I'll post it to you guys in the community channel. Until then, thank you. Thanks for tuning in. As usual, send them a love, my friends. Take care of each other out there. Hans, have a great day, buddy. Hadi, all the rest of you, have a great day. And I'll see you on the channel this afternoon or tomorrow morning. You're welcome, Chief.